the SBA 7A loan, which offers up to $5 million of working capital. The SBA 7A loan also offers repayment terms up to 25 years. That is one of the longest terms that you will ever see. Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're going to be discussing SBA loans and how you can get them approved in 2025. I'm going to be giving you the easiest method in order to do this. Now, over the last few months, I've taken a step back from business credit cards. I think so far this year, I have gotten approved for 3, which I will make a video for down the line. But currently right now, I've been focused on business lines of credit and SBA loans. So business credit cards, they are really good for low cost transactions. And while it is possible to liquidate them, I've done a few videos on that. It's very time consuming, and I don't want to constantly be on the hunt for 0% APR cards. And when you're trying to make very large transactions and actually trying to purchase assets, then it's very difficult to do that with credit cards. And if you've tried that, then you would know. Personally, for me, I'd rather use SBA loans because they have low interest rates. They also have these really long terms in order for you to pay back. SBA loan rates are the lowest that they've been in over a year, thanks to a series of rate cuts that have been going on by the Federal Reserve. So since I've been approved for 3 different SBA backed loans, which is why I wanted to make this video, so we can help a lot of people understand exactly how to get approved for SBA loans so they can get access to all of this additional capital. So we're going to be breaking down these easy steps that you can take to get approved for an SBA loan in 2025. I'll also be giving you data points and application tips as well. And this will apply to all SBA loans that you can apply for with any bank or lender that does participate in this program. So without further ado, let's get right into the video. So the first thing I want to discuss is, what is an SBA loan? So SBA stands for the Small Business Administration, and it's a government agency that helps small businesses get funded with approved lenders. So it's not the SBA that's actually giving you these loans. It is the SBA in partnership with banks like Wells Fargo, Chase, Bank of America, and many more. So the way this works, the SBA doesn't actually do the lending. They guarantee a portion of the loan, which makes it easier for you to get approved, even if you're a new or growing business. Now, there's a few type of SBA loans, but the most common is the SBA 7A loan, which offers up to $5 million of working capital for equipment, refinancing existing debt, anything like that. The SBA 7A loan also offers repayment terms up to 25 years. That is one of the longest terms that you will ever see. Now, there are other types, including the 504 loan. They're very specific and offer loans up to $5.5 million for the purpose of commercial real estate, land, equipment, which also offers terms for up to 25 years. And the third common type of SBA loan is the microloan, which is a loan up to $50,000 for smaller funding needs. Microloans offer terms up to 6 years. Now, the reason why I want to focus on this is because a lot of entrepreneurs are aware of SBA loans. I notice when it comes to my community, we seem to only focus on credit cards or things that seem fairly easy, or anything that involves, too much red tape. It seems complicated. We seem to shy away from. There isn't enough content around this particular type of loan. And I do believe that if we can gain access to this sort of capital on a consistent basis, you are going to see a huge shift when it comes to assets. You're going to see a huge shift when it comes to the things that we can acquire and what we can do. And it could even help close a wealth gap. And this is going to be, I think, in the next 4 years, a great opportunity, which is why I want to start hyper focusing on this right now. Let's discuss some SBA loan general requirements. So in order for you to even qualify for an SBA loan, number 1, you need to have a for-profit business. This just means that your business has to be making money in some type of way. So most nonprofit organizations are not eligible for SBA loans. Unfortunately, they will not qualify. But on the other hand, you have grants. That is the thing that you can always lean on. Number 2 is business operation. Your business must be owned and operated in the United States. I think for most of us watching this video, that's not going to be a problem. You're probably a U.S. citizen if you're consuming this content right now. Now, number 3 is your business address. You must have a mailing address that is in the United States. Again, for most of us, for this general requirement, I think that all of us can comply. Number 4 is business organization. We already touched on this. Your business must be legally organized as a sole proprietorship, a corporation, a partnership, or an LLC. Now, one thing that I do want to talk about, I've been leaning on the sole proprietorship a little bit more lately. If you were to apply for an SBA loan as a sole proprietor, you then can use your personal bank statements or personal tax returns. So if you're making money as a sole proprietor, this may even be easier for you in order to get approved. Number 5 is having an eligible business. You must have an eligible business in an industry. And if you primarily engage in gambling, lobbying, politics, pyramid sales, adult entertainment, like a lot of those things, this is kind of common knowledge, but you're not going to be able to qualify for an SBA loan. I think for the most part, people already kind of have it in their heads what is a business that would not be scrutinized. So if you're in any of these, once again, gambling, lobbying, politics, pyramid sales, adult entertainment, you guys usually know what these are, then you probably will not qualify for an SBA loan. Now, here are some other general SBA loan requirements. So for business size, you must meet the SBA's definition of small business. Now, this varies depending on your industry, but generally you'll need fewer than 500 employees in order to qualify as a small business. Number 2 is limited funding. SBA loans were created to help those who may have trouble getting loans elsewhere. If you go to the SBA website, it actually states this in the eligibility requirements. So verbatim, it says your business must not be able to obtain the desired credit on reasonable terms from non-federal, non-state, and non-local government sources. And the SBA lender who submits this application, they're going to document this. What I mean by that is when you go to submit the SBA loan application, a lot of times you'll be on the phone with someone on behalf of that lender. In my case, my example with US Bank, I was asked for the SBA loan that I got. Will this loan help your business either stay in business, stay afloat? Will this create jobs for your employees? Things like that. It's not going to be exactly stated in a way that's going to be like saying, oh, do you need this? But it'll be stated in some way, form, or fashion where you need to actually let them know you are not able to get this loan from any other source. And that's the reason why you need this. Now, while this, again, isn't something that will be just stated outright, it will be asked of you, and be aware that this will be documented. So the person asking these questions will document this. Okay, be sure that you pay attention to those types of questions because they will vary by lender. And even though this will be documented, there's nothing that you have to actually give them or send in order to prove that you need it. Because I'm sure that'll be a question. You don't have to prove it. You just need to state it. Okay. Number 3 is credit worthiness. Lenders will look at your credit score for SBA 7A loans. And once again, the SBA does not have a credit score requirement. Believe it or not, there is no credit score requirement that's stated on the SBA website. Now, the credit score requirements that you may see on the lender's website is what they set as a qualification requirement. They set that, not the SBA. But what I've noticed is that in my experience, it's listed on the website. If you go to like Bank of America or US Bank or Wells Fargo or many banks, they'll tell you exactly what the actual score that they would use as the minimum will be. So just know that there is and it's usually low. It's like usually 640 or higher. Typically, that's all that you need. So I wouldn't really panic about this. You can still qualify with a lower score as long as the other factors about your business are very strong. Number 4 is business history. The SBA does not have a set amount of time that you need to be in business in order to qualify. Most of you are probably confused right now because I'm sure that you're used to seeing that you need to be in business for at least 2 years or operating for 2 years. But don't panic. You can still qualify without that. I'm very certain of that because personally, I've done it myself. As long as you have a solid business plan and you have a solid personal credit history or at least a fair credit score, you're going to be okay. You still qualify for this. And I'm going to provide you a list of lenders at the end of this video. So just stay till the end and then we'll talk about that as well. Now, generally, the longer you've been in business, the easier it will be to get approved for an SBA loan. But once again, there isn't a specific requirement in order for you to qualify. Number 5 is business credit. Now, this is why I heavily focus on you guys having a structured business and why business credit is important. I remember several months ago, there was someone on my channel that said building business credit was a waste of time. As long as you had a good personal credit score, you would be able to qualify for any credit card. That wasn't entirely wrong. Some of it was wrong, but it wasn't entirely wrong. Technically, if you have a good personal credit score, you'll qualify for most business credit cards, most of them, but you won't qualify for all. When it comes to SBA loans, when it comes to business lines of credit, yeah, that's not going to fly. Just having a good personal credit score will not be enough. And this is a huge factor when it comes for SBA loan approval. SBA lenders will use the FICO Small Business Scoring Service, the SBSS, when checking your business credit score. Your business score will range from 0 to 300, and this score is used to pre-screen those who will apply for an SBA loan, and having a score of at least 155 will help you get approved. So once again, for those people who are just looking for credit cards, cool, your personal credit score, you can lean on that. It'll definitely get you to a certain point, and then eventually you'll plateau and you'll be coming back to something like this if you want to take it a step further. If you never do it, all you want is credit cards, then just do that. But I do believe that at some point, if you're trying to expand, you'll see that that's going to hit a ceiling and eventually you'll have to do something more. The next thing we need to discuss is collateral requirements. The SBA requires lenders to obtain collateral to secure loans from all owners of the business, and that can sometimes be in the form of a personal guarantee, that is a form of collateral, and other qualified types of collateral like your home or other assets. However, collateral is not required for loans under $25,000. So if you do not want a financial review where it takes extensive documentation, always request $25,000 or under when you're getting started doing this. Now, for loans over $350,000, the collateral must cover as much of the loan as possible. So just know when you get to that point where you're trying to look for very, very large amounts, you do need to have collateral that will match what you're asking for, and the collateral should cover a majority of the loan, again, over $350,000. And finally, your ability to repay. Your business should show that you can repay the loan, which means you'll need to prove financial statements like income statements, balance sheets, and cash flow projections. Okay. Now, when it comes to that, once again, if you're not asking for over $25,000, you won't need a income statement. You won't need a balance sheet. You won't need a cash flow projection. Potentially, they may ask you for your bank statements, maybe 3 or 4 bank statements. That'll probably be it. They may ask you to use something like a Plaid to connect to your bank, something of that nature. Or they just may need you to just personally guarantee, and there's no documentation required whatsoever. Again, this varies by lenders, so it's not always the same. It depends on who you're going with. But at the end, once again, we're going to discuss exactly what's the easiest way to do this so you can get qualified. And as you start to make more cash flow, a lot of these things you should have. So I've recently done my business taxes. I filed them. I did it on my own. I recommend that you hire a CPA because I'm still not as confident that it was done as well as it could have been. However, I always like to do things myself. That's just how I learn. Now, with that being said, I did have to make a balance sheet, an income statement. Once I've actually made sure that these taxes have gone through and everything was good, I'll probably give a free balance sheet, free income statements and stuff like that for you to use as a template so that you can have this for your business. So if you have a brand new business and we're talking about, actually filing for taxes and things like that, so you have documentation later, we will have that if you have a new business. Like I keep saying, this shouldn't be a thing that we're harping on. The no doc thing shouldn't be as popular as it is. And I want to, get rid of that because I think it's a stigma that we need to get away from. I want to also talk about personal and business documents. So the documents that you need, once again, they will differ depending on the loan and the program. But here's a list of documents that you can expect that they may ask for: a business plan, a financial statement, a business financial statement, a business certification and license, a business debt schedule, bank statements, and of course, incorporation documents. Now, for me personally, Whenever I've gotten an SBA backed loan so far, the only thing that I've been asked for is bank statements and incorporation documents. They may have asked for business certification and license. That kind of goes with incorporation documents, to be honest. Those are all kind of the same thing. What I have yet to have to submit is a business plan, a financial statement, a business financial statement, or a business debt schedule. These are all things that you should have ideally, but understandable if you don't. If you're a brand new business, of course, you won't have these things yet. I just want to make you aware that these are things that could be asked for potentially. Usually there's factors that vary. And again, it depends on the lender and what you're looking for. Now, finally, let's discuss the easy application strategy. So number one, when you apply for an SBA 7A loan or a microloan, these are the two that I would recommend, okay? At least in the beginning. Only apply for an SBA 7A loan in the beginning. I'm not saying only indefinitely, please don't get me wrong. An SBA 7A loan or a microloan for the same reasons that I stated in the beginning. SBA 7A loan is the most popular. The microloan is a very popular one. You only get 6-year terms with the microloan, and that one can only go up to $50,000. And as long as you are requesting less than $25,000, this normally does not require a financial review or documentation. At the very least, you may be asked for bank statements just to prove that you have the income to pay back the loan, which to me is not a very big deal. If you're making enough money to actually pay that loan back, then this should not be a big deal. Now, the SBA loans that are mentioned here offer the most lenient requirements and have these programs that are geared towards a business that's been operational less than 1 year. So they are geared to helping those types of businesses. This can also be a line of credit. It's not going to always just be a loan. I actually prefer lines of credit. And as soon as I'm done recording this video, I'm going to record another video about business lines of credit. So if you have not seen that, more than likely it's going to come either after this video. I'll probably link it at the end, but you'll be seeing that soon. If it's not currently out now, again, it's probably going to be out. So check my videos, check my channel. You'll probably see the one for business lines of credit. Now, number two, once again, once you've chosen an SBA 7A loan or a micro loan, once you've picked one or the other, some banks don't have micros, so keep that in mind. Not everyone will, but you'll have to just do a quick search and check. Once you found the one that you want, you need to make sure that you never ask for more than $25,000 for a new business, brand new business. Don't ask for more than $25,000. If you never ask for more than this amount, then most of the time there will be no documentation that's requested. If they do, it'll be 3 months, maybe 4 months of bank statements. And that could be from your business bank account or your personal. It just varies. Okay. Number three is the structure of your business. You need to have a business credit score. It makes this process a lot easier. We've covered that already. The SBSS, you want to have at least a 155 or greater. That will definitely help you get approved for this type of loan. And then your personal credit score. The stronger your personal credit score is, then the less likely lenders are to request financial documents. So just keep that in mind, that you can have like a 640 usually or higher, but a 700 or higher would be really good. I would say that because these are looked at by underwriters and they're looked at by lenders who are trying to get you approved. When they see, okay, this guy has high income, or this, or this man or this woman has high income, they have a high credit score, they're not likely to ask you for anything other than that. Doesn't mean that they won't, but it's just less likely to happen. But, if the credit score is kind of shaky, you have no business credit score whatsoever, and we may need to, we have to look over this again. This looks a little, make their job easy. If there's as much, if everything looks good, I may not need to review any additional documentation, but if it looks a little shaky, I need something to make me feel a little bit better about approving this. Okay, so that is my recommendations for getting this done. If you want specific examples, again, I have one for US Bank, but I'll continue to put out more content in the future with specific SBA loans. This is like a general just rule of thumb to get approved and kind of what you should be looking to do in order to get approved. So to sum everything up just one last time, SBA 7A loan or SBA microloan, You want to make sure to have a business credit score of 155 or higher. You need to have a credit score of at least 640, but if you want to make sure that there's no financial review, 700 or higher would be ideal. And then of course you want to request no more than 25,000, but even when you're doing that, you want to at least have 3 months or 90 days of bank statements ready to go just in case they need that. If you follow these easy application steps in this strategy, you are way more likely to get approved for SBA 7A loans and microloans. So right now, if you go to my website, some of you have already been there, successwithstevensmith.com. I've compiled a comprehensive guide of preferred SBA lenders, and I've done it by state. So if you're interested in applying for an SBA loan, of course, you need to know where to go, right? Like I'm not going to just provide you all this information and not tell you what lenders are preferred and where you should go. And of course, you should know based off of your state. And your goal is going to be to work with one of these lenders in your area of the country so that you can get approved. Now, the banking institutions on this list, they have been named by the SBA as SBA preferred lenders as of the recording of this video. Always contact them directly to see what their current status is with the U.S. Small Business Administration, because you want to make sure that they are still preferred lenders, and you want to look up their requirements just to make sure that nothing has changed. Once again, depending on who you're looking at, there are some that require 2 years of operation. One is Bank of America. Chase does the same thing. You may get, more lenient applications for a business line of credit with Wells Fargo, and you may get, it's very lenient with like US Bank, and then you also have your banks like Truist and PNC and a couple of other ones. Again, I've seen mixed reviews depending on who you're talking to, which state you're in. The requirements really can vary. So with that being said, hopefully this gives you an idea of where you can start to look in order to get these lenders. And this recommended lenders list is 100% free. You can download this, share it with your family, share it with your friends. I just appreciate you watching this video, and this is my gift to you for taking that time in order to watch this content. Thank you guys so much for watching this video. I really do appreciate it. If there's an SBA lender that you would like more information about, drop that in the comments below. I would definitely love to review them. I can do the application and make a video about it to cover that content. Once again, if you enjoyed this, like, subscribe, share this video with anyone that you might think needs to know about SBA lenders or who are interested in maybe getting funded for their business. Appreciate you. Have a wonderful day.